recorded. Beautiful. That was very timely.
Yes.
And that's just so the people that can't join us today will have access to the material. We do have a little chat box down the bottom, so feel free to get that warmed up by writing in your name or your business name. And you can use that throughout the session as well. I'll email out a copy of the recording as well as some worksheets before the end of this week as well. So if you do have to leave early or duck out for whatever reason, don't fret, you'll have access to it later on. Before we begin, I would just like to acknowledge the many traditional owners on the lands we're meeting virtually today and extend that respect to any elders past, present and emerging. For those that don't know me, I'm Kate Clark. I work on the economic development team at the Rural City of Wangaratta at the council. And you're attending this session free today as part of what we call our small business development program. So we run a minimum of one workshop each month. We normally do more. We've got one next week on all things Facebook for business. How you find out about these, you've got two options. If you can withstand another email in your inboxes, you can sign up to our e-newsletter. So you do that by going to our website, clicking business and sign up to our e-newsletter. If you don't want that, totally understandable, go to our website, go business and then business events, and they'll all be listed there. And without further ado, I would like to hand over to the lovely Jan Barnard. I see Malcolm Gillies is on the line with us as well. Malcolm's from Small Biz Assist, and Jan's the Director of Financial Management Trainer, and she is an expert in small business financial management. So enjoy the session, and over to you, Jan.
Thanks, Kate. So once I start sharing the screen, I'm not going to be able to see you. So if you've got questions, either unmute and interrupt me, or pop them in the chat box and then Kate can bring them up, or we can deal with them at the end of the session. So I will start sharing my screen. Right, can everyone see that?
Yep.
All good? Good?
Yeah, we've got your, it's in presenter view for us, Jan, so we can
right,
see,
hang on. I
we can see your notes.
yeah, well, then you don't need me, do you, really? I will change that. There we go. How's that? Is it?
Yeah, awesome.
Awesome. All right, cool. All right, well, welcome everyone, and thanks for taking the time out early this morning to join us to talk about supercharging your business financial systems. As Kate mentioned, I'm the Director of Financial Management Trainer. I am a local, not in the rural city of Wangaratta. I'm over here in Moira, but I am in Bundjalung, so I'm just between Yarrawonga and Wangaratta. And in addition to running my own business, I also work with Malcolm at Assist Small Business on contract. So I wear a few different hats, but today I'm wearing my financial management trainer hat. So as I said, we've got 1.5 hours, and it'd be really good if we just focus on what we have to do at task today. So it's really, I love Zoom, but it can be really easy to get distracted if you've, got things popping up from your email, or, you're browsing while you're doing it and then go, oh, what did she say? So, yeah, you've already taken the time to attend. So I would suggest that you focus wholly and solely on the presentation today. As Kate mentioned, we will be recording it, so you'll have a chance to go back to it. But for now, let's get started. So, as I said, you can either put your questions in the chat box or unmute yourself, interrupt me as we go along. Happy with that. And there will be an opportunity at the end for any further questions or comments if need be. Please, if you don't understand anything or I'm going too fast, let me know. This is all about you today. And I want to make sure we've got, good numbers here, but, it's not thousands. So we can address individual questions that are specific to your business if need be. And, most people go, oh, I don't want to ask that question. It might be a silly question. There's probably 3 other people sitting in this Zoom room that are thinking the same question. So don't be shy. I'm certainly not, so I don't expect you to be either. All right, let's get started. So bookkeeping is about keeping your financial records. It's all about a systemised approach to ensuring that you understand the financial numbers in your business so that you can improve your business and you can be compliant. And there's a whole lot of benefits to doing the bookkeeping. So before I get started, I'd just be really interested to know, if you want to pop in the chat box, if you do currently have a financial system such as Xero or MyOb or QuickBooks. So I can get a handle of who's got what. So we've got, Kim's got QuickBooks and Colleen's got Xero. Anyone else about to change to Reckon? Sounds good. Okay, so we've got a few. We've got someone, Soderblom, is that how I pronounce it? She's trying to work out Xero, and Jules has got Soho. Okay, great. Thank you. All right. So why is it really important to have a financial system? Anecdotal evidence suggests to us that up to 44% of businesses fail because they don't have good financial records. They say that, up to 80% of small businesses fail within the first 5 years. A lot of that is because they run out of money, and that's because they're not keeping track of their financial situation. The second reason is compliance. So as much as none of us are really keen with the ATO and the tax department, I was quite happy when they introduced GST because it really forced a lot of small businesses that weren't keeping accurate financial records to do so. And obviously to keep them up to date every 3 months or at least annually as well. But in addition to that, there are you might be an accredited type of business, you might have other compliance requirements. So if you've got good financial records, it enables you to be compliant fairly easily and fairly quickly. Business planning is really important, and our financial records show us what's happened in our business, and it's history, and we can't change history, but we certainly can learn from that. And so it enables us to use what we've currently done to actually look forward and change things in our business that weren't working or things that are working and leverage from them. Cash flow is, if anyone's been in any of my other workshops, they know it's, something that's really close to my heart. We'll be doing a short exercise on cash flow at the end of this session today. Critical, and I'm probably not telling any of you something that you don't already know, particularly given we've had business interruption for nearly 18 months. It could be nearly close to 2 years by the time we get back on deck. So cash flow is king. It is critical. It's the lifeblood of your business. And if you've got good financial records and you've got a good financial system, it helps you to actually monitor your cash flow. It helps us to improve how we manage our business. So, for example, if we've got a financial system that continually tells us who hasn't paid us or who we need to pay, it really helps us manage our business quickly and easily. It helps us stay really organised. I'd love to ask the question, but I know what the answer would be is, how many small businesses have lots of spare time? None of us really do. And so having a good financial system that does a lot of the grunt work for you helps you stay organised and frees up a lot of time. And we'll talk a little bit about that down the track. It allows for us to make decisions in our business that are based on fact and not fiction. So what I mean by that is we'll go, this item in my business seems to be selling really well, but that one's not. If we look at our financial numbers, we can tell which ones are our best sellers, which ones aren't our best sellers. It makes it, we can look at our expenses and say, okay, our utilities bill continues to rise every 3 months by 5%. Maybe we need to readdress that and start shopping around for, better service and cheaper service. So it allows us to have the facts in front of us to make those decisions to improve our business moving forward. And lastly, it helps us with disaster recovery. And so for those of you, currently, and Malcolm will attest to this as well. Malcolm and I both worked in recovery, business advisory recovery after the bushfires. And a lot of the grants that were available, and the same with the COVID grants now, require you to provide your financial statements and a history of what you've been doing from a revenue and expense viewpoint. After the fires, it really delayed a lot of people from accessing their grants because they hadn't had financial systems in place or they weren't up to date. So if you keep your financials up to date all the time, it's definitely going to help you for your disaster recovery in terms of accessing grants and other opportunities that will be around during COVID, particularly at the moment. How are we going? Any questions as yet? I'll take that as a no. Oh, we've got one in the chat room there. No, all good. Okay. So why should you know how to do it? A lot of us will go, well, we've got an accountant and they'll put it all together and then we'll get the numbers and then, that's fine. That's what they're good at. And I know a lot of businesses start to have anxiety attacks if they have to start looking at their numbers. Of course, I don't. I love looking at my numbers, but it's not that hard. And once you start to actually do it, it becomes a habit and a regular habit, and it actually allows you to analyse your business. So I asked the question to you, would you outsource the sale of your product or the marketing of your product or the manufacture of your product or your service to somebody else when you're the expert at that? If you're in business for, I believe, only two things: either to provide a product or a service to others, to your clients, because they have a want and a need and a problem that you want to resolve. And whether you do that because out of the passion, which most small businesses do, you still need to have money to continue that business. Or you're in business to make money. Either way, one of the fundamentals of running a business is to make money. And if you don't stay on top of that, then you won't be able to leverage your business to make sure that you're actually working less and making more. And I know that sounds just like, a bit of a cliche, but it really isn't. And I'll show you as we work through this presentation today exactly what I mean about that. So what are the alternatives? Well, we can keep manual records. And for those of you that are as old as me, you might remember this sort of ledger thing picture that I've got on here up here. A lot of businesses still use spreadsheets and they're okay. So manual records are okay, spreadsheets are okay. But financial systems absolutely make it so much easier. So I'll share an example of around a workshop probably or maybe 2 years ago in a neighbouring council to Wangaratta, and there was a lady there that was running a sheep farm, and she was still using this sort of manual ledger thing that we can see on the screen here, which was great. She said she was happy to do that. She loved, adding up the numbers and blah, 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 blah. So we ran the workshop. It was probably around about April or May. And then she'd found that she'd made an error back in July, in the first month of the new financial year. And so she had to change that error. Luckily, she did it all in pencil, but then she had to rub out everything and re-add everything up for the next 8 months. That's great, that's fine, but I'm sure we've all got better things to do than to spend time doing that. Spreadsheets make it a little bit easier because it can add up for you as well, but it really doesn't give you the detailed information that you can use to actually improve your business performance and make more money. And so financial systems, there are still some standalone ones. And what I mean by that is, you can go to Officeworks and purchase the software and load it onto your computer. But what we're going to talk about today is the cloud-based ones. And so when I first started talking about cloud-based systems, a lot of participants were a little bit worried about security and, who can see your numbers and that sort of thing. Well, I've got two answers to that. The first one is that all of these businesses that provide cloud-based systems, whether they're financial systems or anything else, their reputation is based on the fact that they provide a secure platform for you to record your numbers. And so they are doing everything that they possibly can to make sure it's as secure as possible. The second one I say to everyone is, really, we're not Richard Branson, so I don't know whether, everyone's going to be that interested in my finances anyway. I'm only a small business. I'm not, making billions of dollars that somebody wants to see what I'm doing. So that's my answer to the cloud-based. So what I want to do now is I want to work through some of the benefits of using a cloud-based system. So I've got 5 super important reasons to use a cloud-based system. The first one is to increase your profits. So one of the benefits of getting a cloud-based system is that you pay a regular subscription. And what I mean by that is it's a $30 or a $50 a month each month. They either direct debit, take it out of your credit card, or you pay it on a regular basis. For that subscription, you actually get upgrades for free. So in the past, when we bought standalone systems, if they made upgrades, we had to go and buy another package and upgrade it to that. Or if we've got a system and all of a sudden we start having some employees, we can upgrade to a system that has payroll with with ease as well. They provide the back-end administration into the system. So if they're changing around, and they often do, they have a continuous improvement of what the screens are looking like, how it can be easier for you, adding different reports and screens. They keep the regular maintenance of the system. You don't have to provide that. And often subscriptions come with regular support and training. Obviously, the other thing that helps with profitability is that you don't need to do the backups. It's backed up for you on their sites, and you can access that if required. The second thing is it's all about helping your cash flow. So for these cloud-based systems, what happens is most of them will link directly into your bank account, and sorry, I'm just reading the chat. So Ruby, I'll just go back to Ruby's question. She's got my just got upgraded, and she lost her bearings on what to do. Yeah, that does happen, Ruby. I hate it when, you know, if you have to upgrade any of your sort of software systems. But look, at the end of the day, we just need to work through that. So we can come back in the question period, and if you've got specific questions, I might be able to try and help you with that. So, but thanks for your input, Ruby. Okay, the second one is about keeping your cash flowing. So as I was saying, the systems that are available now will link directly into your business bank account. So it's really easy to keep your transactions in your system. Basically, it pulls in all of the transactions from your bank account at any time. So some of them do it overnight. Some of them will continually update during the day. It helps us to monitor what a cash position is much easier and much quicker and from anywhere. So you can have a look at who's paid their bills, your invoices, while you're out on the road. It also means that you can actually invoice. A lot of them have an app where you can, so if we've got a trade person that's going out on site or a curtain installer that's going out on site, they can actually do the work and do the invoice while they're on site and send it off. And obviously, the quicker you send your invoice, the quicker you're going to get paid. So these things are really about making sure that you're getting that money in the bank as fast as you possibly can. It also helps us to track projects. And so you can have what we call add-ons into the different systems. So they're additional, and you usually have to pay an additional fee for those, but you can bring them in and they can be integrated with your financial system. It helps for us to update our information immediately. So if we get paid an invoice that we've been waiting for, or in some cases your COVID business assistance, you can see that it's come in on your system and you can go off and pay all your bills. So this integration that you can have with these financial systems just enables you to be able to collect your cash much quicker than if you're working on a spreadsheet or on manual, on a manual system. The third benefit of using cloud-based systems is improving productivity. And it's basically because you're way more efficient, you're spending more time you're not actually data entering a lot of things, because you've either getting the transactions coming through your bank account, or you can take pictures of your receipts and bills, and they basically integrate into the system for you, so you don't have to data entry. So it's a lot easier and quicker for you to do that. Also, if you've got multiple users on your system, then they can be updating and you can be seeing what they're doing. So we can have sales representatives or office admin that's actually updating as you're out there working, and you can see exactly what's going on in your business. It helps us obviously then to make quick decisions about anything that's changing in our business or in the trading conditions as well. So productivity really does help the productivity of you and your team to do things quicker and more reliable and based on fact. This is the one that everybody loves. It frees up time. So it obviously automates all those manual processes, as I've just said, the bank feeds, the invoicing on site, that sort of stuff. It also helps us to delegate certain tasks to other members or other staff members. So someone else can go in there and pay the bills for you, because you can set it up so that they can only do that activity. And that's really important, because then that frees time up for you to do the things that you're really good at, which is, developing your product, selling your service, managing the processes. The third point about freeing up time is it gives us the flexibility and the reliability which means you're spending less time on IT and staff issues. So we're not worrying about, upgrading to the next system. We know that the staff have been paid. We know that we've got all the documentation in place for whatever is required from a tax perspective. So it really does give us that reliability. It's way more accurate than doing manual, and it's way more accurate than spreadsheets as well, because all you have to do is have a formula that goes out the door. I don't know about you, but when I've been using spreadsheets there's some sort of spreadsheet gremlin out there that will go in and change my formula without me knowing, and all of a sudden it's just not accurate. So there's a whole website dedicated to businesses, and they're large businesses, that have failed because they've been using spreadsheets for certain activities, and the spreadsheet gremlin comes in and mucks up their formula or data or whatever. So it's very difficult to do that with a cloud-based financial system. One of the real benefits, I think, is this easy to read formats for dashboard reporting. So if you want to refinance, or you want to get an overdraft, or you want to get a loan from the bank, and they go, we need your profit and loss for the last year, it's pretty much at a push of a button if you've got your data up to date. If you're doing a spreadsheet, you have to recreate it. If you're doing it manually, you have to recreate it. If the tax department want to come and audit you, they might ask questions. You can easily go into your system and go, okay, here's the answer. So one of the things that I love about it is that you can take these photos of your receipts and put them in the system, and then I don't have to keep my shoebox. I could ask the question, how many people keep a shoebox, but we don't want to, throw every participant under the bus here today. That's not fair. So finally, it really does improve the performance, because it just gives you more time to focus on the big ticket issues rather than the data entry. The last point here is, again, about disaster recovery. So we've covered it a little bit. It really enables us not only to access financial information in the event of a disaster, but it also enables us to actually continue to run our business from anywhere. And so I was heavily involved in the 2009 Black Saturday fires and assisting businesses there. And a lot of them had put their laptops with the system on their laptops in their car, ready to go. And the car didn't get very far. Thank goodness they did, but the car didn't. They lost all of their data. It was, they may have had their memory stick backups, but they were in the house. And so the last thing you want to do, if you've actually experienced a disaster, is to have a prolonged downtime of your business. And so if you've got a financial system, you can look up your customers. You've got the customer database there with their phone numbers and their emails. You can send out an email broadcast to let them know that the business is down for a period of time. Like, it may not be a bushfire, it may not be COVID, it might have been flooding of your shop front. We're not talking, it doesn't have to be a big disaster, it can be a small disaster. But then you've got your customer base. You've also got your supplier base that you can actually call them and say, we've been down, we haven't been able to run our business for the last 2 weeks. Can we extend our supplier terms? We'll have our bank account details in there. We'll have, our insurance documents, because we've paid them and we've taken a photo of them. So we've got our insurance policy numbers in there. So it's nearly like a one-stop shop for information that's critical to continue your business post-disaster. So they are the 5 benefits to using a financial system and a cloud-based financial system. So before we go on any further, questions? No questions? I'm taking a drink. You're all going to make me talk for an hour and a half flat out. I can do it. It's, you know, it's easy for me, but oh, good, we've got something here. Oh, Emma's got no questions. Kim's got no questions. Okay. I suppose that's good. I'm hoping that means that you're all happy with what I'm presenting. But anyway, all right. This is a critical one. Everyone goes, well, how do I pick a financial system that works for me? The first thing you need to do is think about what the information is that you need. So do you have staff? And do you need to keep payroll records? Are you a retailer or a wholesaler that has stock? Do you need to keep stock records, so a stock management system? Do you have multiple bank accounts, and does the system allow you to track multiple bank accounts? Excuse me. I knew that was going to happen. I'm going to start coughing in the middle of it. So while we're on that point, I would definitely recommend that you do have multiple bank accounts, even if you've only got the one business. You have your trading account, and then you have an account where you put your GST into. And that way, you've got that money sitting there ready to pay your GST when available. I'm going to have to cough, so just excuse me. I don't know if we can cut that out of the recording, Kate. You might have separate information for different businesses. You might be running a number of different businesses. So you might be running retail and wholesale. So you want to keep different records for the different types of businesses. You might have, most of the systems will help you prepare your own BAS. And so that's definitely a money saver if you're confident to do that. Some of the financial systems will either have a customer relationship management ability, or you can actually add that on to your financial system. And so that actually helps you then in your marketing to go, okay, I've sent X amount of emails, they've responded to that email that's led into this sale. And so you can monitor the success of your marketing program through your customer relationship management system that tells you what response you've got, but you can actually put the dollars behind it when it links into your financial system, and you go, that customer bought $100 worth of product from that marketing program or campaign. Do you want detailed profitability information? And my answer to that question would be absolutely. We need to know where the money's coming in from and how we're spending it as well. And do you need project management? So are you doing longer term projects that perhaps have progress payments that are required to be paid to you, or you have progress payments that you need to be paying? So at what stage are we in that project? Because then it helps you actually manage your cash flow to go, that bill's coming up because I'm nearly finished that part of the project, stage 2 of the project, and I'm going to have to pay whatever that money is to the suppliers before I can actually get the money in. So you need to think about what are the critical elements in your business that you want to track, and then have a look at the different financial systems to enable yourself to be able to choose the right one for you. The other thing here that's really important is if you've got an accountant. And have we got any startup businesses today, Kate, at all? Do you know? Or anyone want to pop in the chat?
Most of the ones I know are existing, unless Not so far, no.
Okay. So when we're trying to choose a financial system, one of the things you need to do is talk to your accountant, because your accountant usually has a preference for a type of system. So when I say that, they would prefer that you are using Xero or MyOb or Reckon or Quicken or whatever the case may be. And that's because they are well versed in that system, and that enables them. One of the benefits of having these cloud-based systems is you can actually give your accountant or your bookkeeper, or, you know, in the case of if you've got Malcolm helping you, he can get access into your system and he can have a look at those things that need to be focused on without actually you printing out reports and sending them and that sort of stuff. So from an accounting and a bookkeeping viewpoint as well, that saves you time and money, because your system's up to date. You know, in the day, we used to send the shoebox in and then they would do the data entry. And so you're paying for all of that time. So when you're choosing a financial system, or if you want to change your financial system, I would recommend that you speak to your bookkeeper and or your accountant first, because they may well have a preference.
The other thing, Jan, is the being able to enter data remotely. An example is like if someone goes to farmers markets and they need to interface their cash transactions straight away, having that mobility to be able to do that is another thing that's very important in your financial system as well.
Yeah, absolutely, Malcolm. Thank you for that. I was working with a farm gate business a couple of years ago and had that exact situation. And we'll come back to this, we'll get to this a little bit further down the track, but they had probably 30 to 40 stock lines. And again, when we talk about a turnover myth, and I'll talk about that in a minute, but you know, which products are making the most money and which ones are selling the highest. So what they did is they actually bought the Square system and integrated it into their Xero system. And so the Square system then tracked the sales of each independent item that they had. So they knew exactly how much of each independent item they were selling. And then she could take that information and work out which ones were making her the most money as well. So absolutely, that was, and you know, you can do that from your phone at a market, or you know, when you're on the site. So thanks for that, Malcolm. That's really good contribution. So what systems are available? There are, you know, a multiple of systems available, and obviously when you've shared with me what you're using, we've got some using Xero and some using MyOb. We've got someone using Zoho, which was a transfer system across from a free system called Wave. There are some other ones available as well. Just have a quick look at my chat. Square is fab. Yeah, I think so too. As I said, which one for you? Everyone goes, well, you know, Jan, which one's the best one? They all do very similar things. I would nearly say they all do the same sorts of things. But how they set the system up and how usable it is for you is all different. And so it's part of that getting comfortable with it in terms of going, okay, this is a system for me. And so, you know, you need to think about what you need to use it for, our previous slide, what your accountant bookkeeper want you to use it for, what other apps integrate with it, just as Malcolm said about the Square, or other apps, project management or customer relationships, and then how easy is it for you to use?
Yeah.
Because that's the most important thing. because everyone else can go, oh, you know, Xero is really great for me. But if you look at it and go, oh, but you might find Mild or QuickBooks much easier. If you go with Xero, because we're all telling you should, and you're finding it hard, you're not going to use it. You're not going to use it to the extent that it's available, you know, the availability of you to be able to use it and free up that time and make it work for you. So it is really important that you work through exactly which one suits you the best. So there's no recommendation from me. It's all about what suits you. And now for the hard pitch. What do I sound like? Oh, I've got 10 steak knives to offer you at the end of this or something.
Get the Shark Tank music going.
Well, there's really, and look, usually, Kate, when I'm in the room, I'll be giving them all that, you know, that stare and say, there is no excuse for you not to have a system, because at the moment, Business Victoria have got grants available of up to $1,200 for digital adaptation, and that does cover a number of these systems that I've got up here on the slide here, that you can actually subscribe and you will get a $1,200 rebate back. So, for example, and I was just talking to Kate and Malcolm about this before everyone jumped online. My husband runs his own business, and we were using Wave, which was fantastic, but it stopped with the bank integration. So then it started meaning that I had to do more data entry. So then, you know, there was less time to do other stuff. We accessed the digital adaptation grant for his business, $1,200, and Xero is around $50, $55. So it's given us 2 years of subscription. So it's a bonus. Now, if you've recently purchased an online system, it's quite possible you can still apply for this grant. So definitely go and have a look at that. That's the link up there. I'll pop that in the chat box at the end. Just someone remind me to do that. But it's very easy and quick to have a look at. And look, it's not difficult to apply for either. So it's digital adaptation. So it's also gives you access to other online software. So it might be, I can't remember, but I don't know. So I think Square might be on there as well. So if you've got Xero and you want Square, you might be able to get onto that. Malcolm might have a quick check for me on that one later and let me know.
Yeah.
We've just got a couple of comments coming through.
Beautiful.
And so we've got Jules is just saying that it doesn't apply for new businesses, which may very well be the case. I know Launch Vic do a lot of funding in the startup space, so maybe it is worth having a look and seeing if they've got any grant programs that might cover something like financial software.
I would question why it doesn't apply to new businesses.
Yeah, I can check that out, Jan. I'm not 100% sure about new businesses, whether obviously if someone's experienced that.
Yeah, we'll check that out for you, Jules. We'll come back to you.
Yeah, she's sounding like she's only started this year, and she's had a squiz and has come across some terms saying that you had to be operating throughout 2020.
Well, we'll have a look at that and see what we can do.
Yeah. I'll check it out and send some communication out on that.
Yeah. And then we've got some good commentary around Xero. So Colleen struggled to use it and then went to a workshop and she's never looked back. And we've also got Anthea that recently purchased Xero, and it has helped their business enormously.
So one of the things with Xero is that there is a YouTube channel called Xero TV. And there's also a lot of help online, and there's also a community, what do you call them? Forum thing. That's very professional of me, isn't it, really? Sorry. I'm sure you all get what I mean. So you can plug your questions in there and ask those questions if need be.
There's a
and I think that's
facility
probably
called,
the case for a number of the other systems.
there's a
I
facility
thought we
called,
would have a look at Xero because it is quite a common one that everybody uses, and often the accountants will. I'm talking too much, excuse me.
on Xero, there's a facility called Xero Central. It's got a lot of training courses on there that you can just short courses covering different topics as part of Xero. So that's very good as well.
Yeah, look, I've found, even if I just Google how do I raise a credit note for customer in Xero, you know, that was pretty easy for me as well. So yeah. Okay. So we will have a look at another chat there. Oh, that's good. Okay. So this is the dashboard when you first set up your Xero account, and I quite like a dashboard. In fact, I wrote a whole guide on dashboard reporting. And it just basically gives us a bit of a snapshot. You can add in different things into this. This is just the basic one. So it just tells us how much is in our bank account, how many invoices are owed to us, and just a short summary of the cash in and cash out. So this is a business that's only just started recording in Xero as of July. So we can see that we've got a little tracking thing here that tells us about the money that's coming in and out of our bank account. It also says that we need to reconcile 4 items. So what that means is the transactions come into Xero from your bank account. You then need to allocate those into where you want those transactions to go. But the thing I love about Xero, and I'm pretty and QuickBooks and MyOb do the same, you can set up a rule. So for example, if every month you've got an insurance payment coming out of your bank account, you can set up a rule so that when Xero sees that transaction, it tells you this is where it should go. So it's just a click of a button. I love saying that. Okay. The second one, this is really important. This is you know, so important in your business, because what I've said to you is that financial systems will provide you with information that's based on facts rather than fiction. But the system's only as good as how you set it up. And so a chart of accounts is basically it's a plan on how we organise where our revenue goes, what it costs us to make those sales, our expenses, you know, how many assets we've got in our business, what loans we owe, and what the business owes us. And so a chart of accounts ends up being the framework for those reports that you can generate. So all of these systems that you buy come with a standard chart of accounts, but there is the ability for you to actually adjust those, amend them, so that it really represents the detail that you need in your business. So if we have a look at the Xero chart of accounts, this is all the accounts. We can see up top here all the accounts. So we've got a bank account, we've got sales. This is a handyman business, so the whipper mowing, there's maintenance. They buy whatever they buy for their businesses, and then they get the money back. So that's a resale of purchases. Then we've got cost of goods sold. So that's the purchases that they resell. Then they've got general purchases. Obviously, we've got fuel for their mowers and other things, whippersnippers. And then we go into detail of the expenses. This one's been set up specifically. They've added in accounts that are specific for them, such as this fuel for equipment, the cost of goods sold, and such as this resale of purchases where they charge it through here and then they recoup it through here. This chart of accounts shows us our assets. So the assets in our business, obviously it's the bank account, some of the money that's being owed to us, and then we can put in other assets in here. So if we have a company car or a fit out of a store, it can go in here as well. So again, the chart of accounts is actually reflective of your own business. And if you're not sure what you need to do around this, you can talk to your bookkeeper, your accountant, or you can have, ask Malcolm for some help and he'd be able to help you with that also, or me. Again, this one is around your liabilities. So it tells us what bills we've got unpaid. It tells us how much GST that we've collected that we need to pay out. It tells us how much superannuation if we've got payroll. It tells us, it tells us what we have to pay in payroll tax, etc. In there, you'd also put bank loans, credit cards, that sort of stuff. So again, the chart of accounts, this is where you set it up in Xero. The other systems have this similar sort of situation. You get that set up so it reflects the information that you need and you can see that in the reports that you require. So this is another benefit of having a system. And again, we've got the dashboard I showed you at the start, but also a business snapshot. So it tells us how much profit or loss we've made for July to August. It shows us a trend of our income, which is going down, which isn't a good thing. It shows our expenses, though, are also going down. So, and then the bottom of this screen, and it's very hard for me to get print screens that are big enough for you to read. It also shows us a detail of the invoices that are outstanding and also the bills that need paying. Okay, let's talk about a balance sheet. How many of you are familiar with a balance sheet? If you can just pop in the chat box, please. Oh, look at this, everybody. Oh, Kim and Leah. Emma hasn't had to do it yet. Okay. I'm impressed. Ruby, you're not the only one. Ruby's put in the chat box. She gets overwhelmed with lots of information. I understand, and I hope this isn't overwhelming you, but if it is, then we'll certainly be able to come back to you and help you individually if required. So the balance sheet shows us the financial position of the business as at any point in time. So this one here is from Xero and it's as at the end of August. And it basically shows us the assets that we currently have in our business. So what we own in the business is what assets are. Liabilities is the money that we owe to external stakeholders of the business. And then equity is basically what the business owes you. And so here in this particular balance sheet, we can see that we've got total assets of 2,161. And I do apologise for the sort of the hard to read, can't think of the word, early in the morning. It was the best I could do. So we've got, our assets at $2,161. We currently owe $2,747. And so it means that actually we owe the business rather than the business owes us. And the reason for that is that owner has drawn out more money out of the business and what's available. So when we talk about we've got 2,161 in assets, so that's in this simple one, it's money in the bank plus what people owe us. If we have to close up tomorrow, we'd have to pay out $2,747. So we'd actually have to chip in $688. So this helps us monitor to make sure we're not pulling out too much money out of the business all the time. It also helps us to monitor to make sure that we've got this $1,131 ready to go to pay our GST. Any questions on that? Kate, I've done a really bad thing. I haven't got my phone here with the time and I can't see the time on my screen. How are we going for time?
That's okay. It's just hit 9 o'clock.
Beautiful. Okay. All right, this is the profit and loss statement. Same deal. Quality is not that great. This is from Xero. So it will give you, if you ask for it, a comparison of months. Obviously, this particular business didn't start using Xero till July, but it gives us a detailed breakdown of where we're making our money. So this is what I was saying to you about setting up your accounts so it reflects what you've got. So if you have a number of different offers, so for me in my business, I'll offer business coaching, I'll offer business consulting, I'll do workshops like I do now. So I separate my income into those categories. So at the end of the year or at the end of the month or at the end of the quarter, I can go, okay, I'm actually earning the most money running workshops. So that's the thing that I need to really focus on. Or business coaching is really, gone up a level because people are really needing that help. So by you actually putting in the different types of income, you can actually read what's going on. So over this period, we can say, all right, the maintenance wasn't very high in August, but it was in July. The mower and whippersnipping is gone up exponentially over August. And other revenue, which I'm not sure what that would be, has increased as well. All right. This one, and we'll come back to this one, but cost of goods sold is all about if you're selling product or you have a direct expense. So a handyman isn't necessarily selling any product, but the direct expense will be, as we've got here, fuel to run those mowers and those whippersnippers, or, well, it says fuel for equipment. So how many of you are actually selling product or keeping stock to sell product or service? Service-based business, Jules is, okay. It's got a product-based business as well. Anthea's got none. Colleen's service and products, okay.
Good spread.
Sorry?
Good spread across both service and product.
So in this cost of goods sold, we need to put in our direct costs in providing that sale, whether it be a product or whether it be a service. Okay. This is subjective. So again, people will go to me, what should I put in there? Well, it really depends on what type of business you're running and what direct expenses you have. So when we think about selling a product, we might think about marketing. And so part of our marketing costs might be Facebook ads. Okay. I would probably say that's a general operating expense because you don't necessarily end up allocating that to a specific sale. But when we go about marketing and we've bought packaging to put our product in, I would say that goes into the cost of goods sold because it's directly related to the product that you're selling. Again, like I said, it's subjective. Your bookkeeper, your accountant can help you determine what needs to go in there. Okay, but we need to have that because we need to work out what our gross profit is down here, and we'll come back to reasons for that shortly. Then all of our operating expenses are underneath here. Push this button and I automatically can see that in the month of August, I've made $5,533. So business is going well. But when I think back to my balance sheet, I go, really, I think even though business is going well, I really shouldn't be pulling out as much money as what I am. Okay. So you can see that different statements will show you different things and enable you to make different decisions based on what you're looking for. So while we have good profit, we only have 1,771 in the bank because we've been drawing out way too much over the last 2 months for our own, I'm assuming it'll be a salary or a wage or pay their bills, their personal bills or whatever. Does this make sense for everybody? Is everyone okay with that?
We've got a really good question in the chat box, Jan.
Yep.
Tim's just asked, where service is tied to your time, would wages go in COGS as it's direct?
Love that question. Yeah, get it quite a bit. It really depends on your business. And so my standard answer to this is if you're running a manufacturing business and you've got someone on a process line and that's all they're doing, right? They're just, pushing the widgets through, putting them in the box and ready to sell. That is a direct cost. If it's you as an owner and you're doing other things, I would tend to put it in as operating expenses or overheads. The ability to track your time on your product is probably a good thing. And so you might want to do it outside of this statement to see how much time you are spending developing a product, putting it together, manufacturing it, whatever. But generally speaking, for small businesses, I argue that their wages should be an operating expense, unless you're a manufacturer that you've just got that one person doing that one job that's relating to developing that one product all the time. So does that answer your question, Kim, or are you still a bit confused?
It said yes, thank you.
Great, thank you. All right. So let's talk about some other things other than just zero. Let's talk about what we can do with this information that we get from our financial system. So we can analyse where your business is now. I've just shown you that, okay? We know what profitability is in that business. We know what a financial position is. We can look at our profit and loss statement and look at our sales, our profitability. That's great, but we also, the bigger picture, so, the fact, not fiction, is about looking at trends in our business. So overall trends over a period of time. So we'll just go back to the profit and loss statement, you can see here that when you ask for a profit and loss statement, actually gives you a couple of months across a line for you, so you can get a bit of a trend there. What I like to do is have this, and some systems will provide this information for you. But basically, putting in your sales, your cost of goods sold, and what that is a percentage against your sales. Your gross profit, what that is a percentage against your sales. Split out your expenses into variable and fixed. So an example of a fixed expense is if you're renting a retail premises, if you have, your phone is a fixed. To give you a clearer example of what a variable expense is, that would be your marketing, for example, because the more you spend on marketing, you would expect the more your sales to increase. Okay, so that's the split between them. We then work out what our total expenses are, our net profit, and what percentage of our net profit is. If we fill in these boxes moving along, it will give us the trends. Okay, and so depending on what system you've got, you might be able to get this information directly out of your system. If not, I'm going to provide this template to Kate and she will send it out and you can just start. For those of you, if you're a whiz on the old spreadsheet, you can bang it in there. So spreadsheets, I'm not saying don't use them at all, but it just gives you an overall view of what the picture of your business is and what the trends are. So it's really important for you to be watching that on a monthly basis. For example, if my cost of stock is going up each month, and I don't look at my numbers till I do my BAS return or the accountant does my BAS return, I'm 3 months down the track. So I've already lost money. If I'm watching it month 1 to 2 and it goes up in month 2, it makes me go, why is that going up? Let me go back and check that. And your supplier might have put on additional fees or whatever, which gives you the opportunity to negotiate or change suppliers immediately. And so that's why it's really useful for you to be monitoring and measuring your profitability at all times. All right, let's wrap it up with how do we improve business performance? A business is made up of a number of key drivers, and what's important to your business, your key drivers will be very different to everybody else's key drivers, okay? So what do I mean by that? For example, if we are a manufacturer, efficiency is one of the key drivers. How much goods can we put through that process line? So we're looking for productivity and we're looking for, better ways to do things either with our staff or with our technology. If we're a service-based business, obviously profitability is a key driver, but our sales are. So are we pricing our products, our services at the right price point? How much of our services are being taken up, so volume? And, is there an ability for us to remarket into our customers for our service-based business? Pretty much the same for product-based businesses as well. The chat here. Okay, yeah. Thanks, Jules. There's probably a few doing a home learning. So again, this business key drivers is a part of a guide that I wrote for CPA Australia called Improving Business Performance. And in that guide, it goes through every one of these boxes and talks about what it means and how you can actually improve your business under each of these categories. And so I will be sending that to Kate for you to have as a reference point as well. Let's talk a little bit about the turnover myth. So I've alluded to this earlier. It's great if our sales are going through the roof. Wow, look, we've improved our sales by 10%, 15%, 20%. Not all sales are good. What we need to work out is the ones that are making us the most money. And usually in small business, it's the product that you went into business with that doesn't make you the most money. And so you have to nearly throw your baby away because everything else in your business is picked up. And if you're making good sales from a product that's making high profit out of that product, you have to work, you don't have to work as hard. So we need not just to look at sales as one number. We need to understand behind that which ones are making us the most money, which ones are the ones that people want the most. If the ones that the people want the most aren't making us the most money, are we pricing it right? Are we paying too much for stock for those products? Is there a way we can do it better so that we actually make more money off these sales, not just make more sales? So that's what I call the turnover myth. Oh, our turnover is going up. Our turnover's gone, you know, or someone will come and say, oh, I do $1 million turnover. And you're like, wow. Until they go and you ask them what they're made for profit and they go, oh, $10,000 loss, you know, and you've only made $50,000, but you've got $5,000 profit. Way better. So turnover isn't all it's cracked up to be. We need to get behind the numbers. The second thing I want you to think about is your gross margin. So this is the money left over after your sales and your cost of goods sold. And it's really important not to look at this because money left over after we take out our cost of goods sales is the money that's left to cover our operating expenses. So we need to make sure that we've got enough money to pay our bills after we've made our sales. So it is a critical element to measuring how productive your stock is, how good your sales are, making sure that you're making as much profit as available to your business. So gross margin, which is on that monitor and measure template that I'm going to provide you with, is also a very important element to check. All right, let's just wrap up with one of my favourite topics, and that's cash flow. Cash flow cycle. I want to just go through a bit of an exercise on this, just to show you how you can actually improve your cash flow fairly quickly and easily. So if we look at a typical business doing a typical sales type of role for a product, we buy our product, which is on day one on this particular, on this particular cycle. We have to pay the supplier within 15 days. So we buy the stock and they give us the bill, and then it's due on the 15th of the month, or 15 days from when you purchase the stock. You sell your product on credit for 30 days. So we purchase the stock, we pay the supplier. Between day 1 and 30, we make the product and we sell it. And then we sell it on day 30, means we get our money from our customer on day 60. In terms of our cash flow cycle, we've got a trading cycle of 60 days from start of purchase to when the money comes back in the bank. In terms of our cash flow cycle, the money goes out on day 15. We don't get money back in until day 60, which means that on day 15, we have to have enough money to pay this supplier and our other bills before we get money back in day 16. So it means we've got a total of 45 days of funding we need to make sure we've got covered our bank account. Now, if we make small amendments to the trading cycle, this means that we don't have to have as much money sitting idle in our bank account to pay the bills. So if we purchase our stock and we can pay the supplier in 30 days, we sell the product on 30 days, we've still got a trading cycle of 60 days because the customer isn't going to pay us until day 60. But our money goes out on day 30 and it comes back in day 60. So we only need 30 days of funding. So where you have to pay your supplier before you sell your product, there is always going to be a funding requirement. If we ask our customer to pay us within 15 days, then we purchase our stock, we sell it on credit in 15 days, we pay the supplier in 30 days. Sorry, if we sell our product quicker. So our trading cycle is only 45 days. We purchase our stock, we make it quicker, we pay our supplier on 30 days, and money goes out on day 30 and comes back in on day 45. We only need 15 days of funding. So what I'm saying to you is when you're looking at your cash flow, how long is it taking you from the start, getting the product ready for sale and then actually selling it? How many days is that? How many days have we got to pay our supplier? So if we sell quicker and we can pay our supplier the future date, it means we only need to have a smaller amount of money in the bank to pay our bills. Okay, so let's just wrap it up here now.
We did just have one comment just before we move on, Jan. I think it was Kim just said, or just reduce your trade terms. So perhaps she's had some success in not having that 60-day time frame.
Correct. And so I worked with a business for probably a couple of years, 2 years. Again, in a neighbouring council, and it was a garden supply. So, they do dirt, compost, that sort of stuff. And so they provided credit to their tradies, and it was on 30 days. And obviously one of the reasons I get pulled into to help businesses is on cash flow. And I suggested to her that they went back to 15 days, and she was really hesitant. She was like, oh, but it was getting really tight for her. So in the end, she sent out an email to everyone saying she was going to reduce the trading terms from 30 days to 15. If they had any issues, ring her, email her, whatever. Let's be honest, we all know if we give trading terms of 30 days, often we don't get paid till 45, right? So she reduced from 30 to 15. No one said a word, and she was getting 80% of her payments on day 15, 16, 17. And, there's still some laggers at 30, but it was definitely not 45 days. So if you reduce your terms with your customers, and particularly if we're supplying small business, us small business people are really good at paying each other. It's those big businesses that are reluctant to give us the money. So it doesn't hurt to ask, If you don't ask, you don't get.
Exactly. And Ruby's just commented 60 days. Is this a bit long in this day and age?
Oh, absolutely. Absolutely. Get paid, it's very long. And to give credit is way too long for small business. We don't have that excess of cash sitting in the bank to fund, basically, if you give someone terms, you're providing them with an interest-free loan. So think about it that way.
And I'm in no way qualified to give financial advice, but I know my parents always taught me, pay your bills early and you'll always be looked after. So, you can always treat all of your customers with the utmost respect, but those ones that are consistently meeting your terms or exceeding your terms, let them know that you appreciate that.
Yep. And if you've got serial late payer, sack them. So I'll give you, this great scenario. Another business that I worked with, another farm gate, making homemade cheese, and I'm like, you're selling way too cheap. You're selling at supermarket prices, and it's artesian cheese. The parents were involved in the business as well and had been for a long time, and they were doing the markets. And they're like, oh, if we put the prices up, oh, no, if we do, no, we won't make the sales, blah, blah, blah. So I went, okay, this is, all I can do is point you in the right direction, up to you. Anyways, his parents went on a bit of a grey nomads trip, so it was obviously way before COVID, for about 3 or 4 months. So while they were away, he put his prices up. Anyway, he rang me. I'd finished working with him, and he rang me, and he goes, oh, I need some help doing so and so. And I said, oh, okay, yeah, no, right. He goes, oh, by the way, Jan, I just had to let you know I put the prices up. And I went, oh, okay, how did it go? He goes, oh, I lost a third of my customers. And I thought, oh, I'm going to be in so much trouble here. He goes, the third that I lost were the ones that never paid or always complained, or he goes, I'm making more money and spending less time on difficult customers. It's been perfect. I went, whew, lucky for that. I was pretty happy with that. But that's often the outcome that you get. So, give it some thought. All right, we've got some questions in the chat here.
I think you've covered all of them thus far.
Okay, great.
We're just at 9:25, so we might...
Well, we'll wrap it up right now. So my top tips: pick the right financial software for you. Make time to set up your chart of accounts so that it looks like what you want it to look like. If you're not sure, seek advice. And then set aside time every week to make sure that you look at your numbers, you look at where your money's going, you've got your invoicing up to date, all your bills are in, okay? I know Ruby said she gets overwhelmed, but if you do it regularly, it becomes a habit, and it's not that hard. Keep your personal and bank and business separate out of, your money in your bank, and use your technology to save your time and make great business decisions. So my last say, as Janine Allis would say, if you don't know your numbers, you don't know your business. So don't leave this really important issue in your business to somebody else until you understand it. Once you understand it, absolutely get a bookkeeper, but then you know what questions to ask your bookkeeper. So have we got any other questions or comments? That's my contact details there, which will be on the recording, and I'm sure Kate can share with you. So I'm going to stop sharing. And we've got some questions in the chat box.
We had one come through from... Lots of thank yous. From Kim, I have a question about negotiating bank fees. I use a high caps terminal and only one bank provides this service. They charge $25 a month. Is it reasonable for me to try and negotiate this if I'm a small business with low turnover?
If you've got low turnover, I would definitely negotiate it, because obviously there's less transactions going through the bank.
Back to that don't ask, don't get almost.
Correct. And so I'll give you a classic example of a friend of mine who, this isn't business related, but has a mortgage and was paying 4.75%. And that was the rate that's on the website, blah, blah, blah. But if you came in and got a new loan, they were giving new people 2.75. So she rang them, but she didn't ring them until like a month or two ago. This has been going on for 18 months. And they straight away reduced it to the 2.75. So she's kicking herself now that she didn't ask way back when. And don't be scared to shop around. Okay. So, yeah, I know that the high caps thing is a specialty thing, but all the same, yeah, definitely. Don't forget, you know, you're their customer. Your business isn't going to operate without your customers. So it's in their best interest to try and suit your needs as their customer. And that's the same with suppliers. So again, I did a lot of work in 2008, 2009 with CPA Australia around the global financial crisis. And we did national round tables around Australia. And a lot of the suppliers were extending their business terms to their customers, so the interest-free loan, so that they had more time to pay. So because they were so short on cash flow. So don't ask, don't get, but, you know, definitely, and build that relationship with them. Ask them for a payment plan. Tell them what you can afford. All right, I think we're probably at tail end, are we, Kate?
9:30 on the dot.
Oh, do I talk that long?
Beautiful. I might get you to hit stop recording just so that we can make sure we get that come through seamlessly, so that I can push that out to everyone before the end of the day, hopefully, with those worksheets